European stock markets are trading mostly flat this morning, with the UK's FTSE 100 index on the flat line, while the Euro Stoxx 50 index is down around about 11 points. The DAX in Germany is weaker than the other two indices. It's down about 17 points. US stock futures are also drifting lower. The Dow Jones Industrial Average front month futures contract is down 6 points, while the S&P 500 front month future contract is currently trading flat. The euro has regained some ground this morning. It is at that 128 level against the dollar. It was hit yesterday, reaching levels we haven't seen since April 2013, and that was mostly driven by remarks from ECB policymaker Asmussen, who said that the ECB's extended ultra low rates policy goes beyond 12 months, and that the ECB could look at other measures to stimulate the Eurozone economy. Sterling is also weaker on the back of the UK figures out yesterday. Manufacturing output dropped, industrial production came in flat. Now in the quantity space, oil prices remain elevated, of course, on the geopolitical tensions in Egypt, while commodity prices, when it comes to metals, we're seeing a bit better picture, with gold currently up about $6. Peripheral bond yields are creeping a little higher, especially Italy, after S&P downgraded the country's credit rating, and in core government bonds we are seeing a bit of a pickup in UK gilts and German bonds. Good morning, I'm Ishaq, Siddiqi, and welcome to your daily market bite. Let's go through what's going on today. So overnight we had a weak session in Asia, and that was on the back of some poor trade data out of China, where exports and imports both fell, reaffirming the slowdown in the country. And in the US we had a strong session with investors cheering on some of the good earnings releases, particularly from Alcoa, which sounded off a pretty positive release, and instilling some optimism ahead of the earnings season, which is getting underway at the moment. But a lot of that momentum was lost in Asia overnight, given the fact that we did have this poor reading out of China. And in the European session this morning, investors were quick to react to the S&P downgrade of Italy's credit rating. Stock investors didn't really react to it, but like I said, peripheral bond yields did creep higher. It seems like the move has been largely shrugged off, as investors are more concerned about the ECB's upcoming policy measures, and if they are going to look into using additional non-conventional tools to stimulate the Eurozone economy. Now going away from on the ECB front, there is a bit of cheer in the when it comes to the UK. Moody's upgraded their outlook for the UK banking sector this morning to stable from negative. At the same time, we had the IMF revising its growth forecast for the UK economy yesterday. Conversely, the IMF actually cut global growth forecast, particularly for the Eurozone and the US, which it tweaked its forecast for the US. And the IMF cited a protracted slowdown in the Eurozone and worries about the emerging market space going into 2013. So throwing in some gloom in the global markets when it comes to what the IMF has to say. But in general, the risk tone, although somewhat weaker today, hasn't really changed, with investors still pretty hopeful that we are going to see a continuation of strong earnings coming out from the US, and we are going to see some good economic data. Now, when it comes to economic data today, it's pretty thin on the ground. We haven't really had much out from the Eurozone, and when it comes to the US, not much out from that side either. But we do have the FOMC meeting minutes, which is the big risk event later on. We won't really have a chance to react when it comes to stocks in Europe, so we'll be able to react tomorrow. In terms of the FOMC meeting, it is a backward-looking report, but investors will be able to get a better sense of how the Federal Reserve are going to essentially work out their policies going forward. We know that they've put out the intentions to unwind stimulus by the end of the year, and look at halting the measure by mid-2014. What investors really want to know is more details on if the Fed is looking to unwind a lot quicker than they have already set out. So earlier than the timeline of the end of the year, perhaps as early as September. That would worry the market quite a bit. And at the same time, we're looking for more clues to how the Fed sees the U.S. economic recovery and the performance so far, and if it will possibly look at adjusting their forecast for the U.S. And touching on Egypt briefly, it is the start of the holy month of Ramadan, so tensions might start to ease somewhat, but at the same time we are still seeing a lot of violence in the country when it comes to supporters of Morsi and supporters of the army. Big polarization when it comes to Egypt, and a massive divide between the two. Civil war is not out of the question, and the country's tourism is essentially being crippled, but at the same time we have seen some encouraging signs when it comes to foreign investment. The Saudis and the Emiratis yesterday pledged together to fund Egypt by $8 billion. That's still not enough. The Egyptian economy needs roughly around about $15 to $18 billion in order to pretty much get back in form, and even then it's a difficult task. So a lot of it depends on the IMF's funding, which is around about $3.8 billion, and that looks to be pretty much dead in the water. So for that reason, oil prices are pretty much staying elevated, and that's also due to the fact that the Suez Canal, which sees the transport of about 2% of global oil, is under threat, or perceived threat from any disruption when it comes to supply. Other than that, not much else going on. It is the start of the summer season, and we are really just looking for earnings to give us some direction. So I'll discuss that with you tomorrow. Thanks for watching.